Welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because for the first time in a long time, Bitcoin briefly entered the cheap region on our Is It a Good Time to Buy Bitcoin chart. This is my favorite chart for accountability when navigating Bitcoin cycles because mean reversion is a very powerful force in markets, and I have been getting absolutely roasted over the past year for having the audacity to call anything under 200K expensive for Bitcoin. And what do you know? Everybody was clamoring to buy Bitcoin above 110,000, but now that it's in the low 80,000s, it's crickets. And this is completely understandable because this is exactly how market sentiment and narratives work. Everybody loves buying when the narratives are bullish and everything looks amazing during extreme greed, but there's always narratives and scary price action when sentiment is at its lowest in extreme fear, and the buying opportunities are better if you have a long time horizon. And I completely understand why investors are fearful here. Bitcoin's realized losses for short-term holders are now at the highest levels since the FTX crash in November of 2022. And it's no surprise that short-term holders are capitulating here and selling for a loss. Their average cost basis is close to 110K. One standard deviation below that was 96K. So we're probably two standard deviations below the average cost basis of short-term holders. And here's a great visualization of those realized losses by short-term holders. You can see this current spike completely dwarfs what we saw back in April of 2025 during the tariff tantrum. It also completely dwarfs what we saw in August of 2024 during the Japanese yen carry trade implosion. And there's really not much before that until you go all the way back to one of the largest exchanges in the world becoming insolvent in November of 2022. We're also seeing quite a bit of pain among digital asset Ponzi's. I mean, treasuries, they are now all mostly trading below their MNAV. And aside from a few known brands like Strategy and Bitmine, a lot of these are going to have a lot of trouble raising new debt to buy more Bitcoin. And speaking of MicroStrategy, this is another one that I was getting absolutely roasted on throughout 2025 for calling this blow off top peak FOMO similar to early 2021 and how we expected a volatility crush as Saylor used all of that volatility to issue new shares and use it to buy Bitcoin. But we're now starting to see some real capitulation on MicroStrategy here, and it's approaching a major support level at the 200-week moving average alongside a previous accumulation region, which is the exact same place that it bounced in the previous cycle. So I expect at the very least a mean reversion bounce here. As for the Bitcoin spot ETFs, we're seeing quite a bit of capitulation for those as well, with $2.47 billion leaving IBIT alone and $3.79 billion leaving all the ETFs combined in November so far. And you can see the ETF outflows are starting to get pretty aggressive here. Again, compared to how much money has flowed in over the past few years, this is just a blip on the radar, but it is putting downward pressure on price in the short term. And as I've been saying on this channel for the past few years, it's incredibly important to be prepared for multiple outcomes. If we're maintaining our short-term trend, which I like to use the 20-week moving average for, we can expect a rally to continue. If we're maintaining our medium-term trend, which I like to use the 50-week moving average for, we can ignore bearish narratives, we can ignore all of the FUD, and we can expect our bull market to continue. However, when we break our medium-term trend, we have to accept the reality and not look for arguments that match our bias and convince us that we can just ignore the facts and remain optimistic that this is going to reverse immediately and head to new highs. Now, I have a longer term thesis on Bitcoin because I do expect it to go up over time, as shown by its 200-week moving average that it likes to return to during bear markets. So that is my base case as of right now. But if we can reclaim the 50-week moving average or show some type of strength, I'll be happy to adjust my views once again and position accordingly. And this is exactly why Monday's free weekly report was called the trend break. In markets, there's always infinite bearish arguments you can use as an excuse to never buy and remain 100% cash. And there's always infinite bullish arguments you can use to justify being 100% in the market. But my favorite thing about TA is it's purely just facts. Right now, there's a ton of speculation and rumors circulating that this sell off is being driven by wounded market makers that got wrecked in the October 10th liquidation event. You also have a bunch of people speculating on the fact that this sell off is being driven by the MSCI index, likely kicking out crypto treasury companies. And you also have a ton of speculation and fear surrounding the fact that Bitcoin OG whales are selling billions of dollars of Bitcoin, and they're doing this because they're giving up on Bitcoin and switching to privacy projects like Zcash. But the problem with rumors, speculation, and narratives is that there's no way to actually validate them, and they're a very convenient way to feel good about our bias and convince ourselves that we can ignore reality. And this is why I find technical analysis and price action so valuable, because I think fundamental research is great for a long-term thesis. If you're a day trader, you probably would have seen this false breakout as a major warning sign to perhaps reduce some leverage. If you were a swing trader, you perhaps would have used this range breakdown as a major warning sign to cut some exposure. But since I am more of a long-term investor in Bitcoin and like to trade the cycles, I like to use the 50-week moving average as my macro invalidation of when I have to reconsider my bias and views and try to figure out what I could be missing. This is what allowed me to really get aggressively bullish in March of 2023 when Bitcoin reclaimed its 50-week moving average after spending the entire bear market below it, even though there were so many bearish narratives at the time. Silicon Valley Bank had just gone under, and there were so many macro experts calling for a recession. And it's hard to ignore the similarities between this cycle and 2021. You have the false breakout, you have the range breakdown, and I really wanted to believe that Bitcoin would be able to hold here if we were in fact bullish and if liquidity was in fact going to increase. But with the break below the 50-week moving average, we have to really acknowledge the fact that the trend is broken and there must be a reason why. So what changes will I be making to my portfolio on Monday? I'll definitely share exactly what I do in the free weekly report, but I do believe I'll be buying a little once again because I can't help but buy an asset I believe in long term when I see this much fear, this much short-term holder capitulation, and us being this close to the 200-week moving average. Is it going to be the bear market bottom? Most likely not. My preferred style is slow profit taking when I think Bitcoin is expensive, and slow accumulation when I think Bitcoin is cheap, knowing full well that I won't be able to time the bottom perfectly and go all in. And trust me, I don't enjoy it when I have to make a bear market my base case. I would love nothing more than for this to be a bear trap and for this to just skyrocket from here and pump our bags. But we do also have to face the reality of what the price action is telling us, even if we did have higher expectations for this cycle. And as always, if you'd like to learn more about my portfolio system or mental models I use to navigate markets or common mistakes I see so many investors making, you can check out the Crypto Enjoyers program and community in the video description. I know it has been a rough November so far, down over 23%, which is the second worst November in Bitcoin's history, second only to November of 2018, which was the capitulation event at the end of a bear market. Interestingly enough, Bitcoin spent 2018 going sideways as well, similar to 2025. The sell pressure has been so strong this week that we didn't even get the death cross bounce that we have gotten each and every time Bitcoin has had a death cross this cycle, telling us once again that we do have to face reality and how this correction is a bit different than the previous three. But the good news is that Bitcoin has a very high likelihood of bouncing here. It was the consolidation we had in April of this year. It's the 100-week moving average. We also are getting very close to the 200-week moving average. So at the very least, we have a high likelihood of bouncing here. As for macro, the GLI is still in a downtrend. The market was panicking earlier this week because the December rate cut expectations dropped all the way down to just 33%, and everybody was convinced we were going to get a pause in December. But after some concerning economic data, those rate cut odds doubled. The market is now pricing in a 71% chance of a rate cut in December, followed by a pause in the following two meetings, and this is not enough for the economy or markets. And this recent Fed hawkishness is continuing to strengthen the dollar and put downward pressure on global liquidity and risk assets. We know QT is coming to an end on December 1st, but we have no idea how many months it will be until QE restarts. So although we are still in a global liquidity index macro breakout, the timeline is something we have to risk manage here because we have no idea when Trump is going to announce the new Fed chair, and we have no idea when the Fed is going to restart QE. Gold continues to consolidate here after the incredible rally it's had, and I expect its macro bull market to continue thanks to these liquidity dynamics. But the price action from Bitcoin is concerning because unlike gold, it has already completely broken its structure even while gold has remained strong and the S&P 500 is still maintaining its 20-week moving average. A lot of investors were relieved to see Nvidia beat earnings this week. That was one of the major concerns the market had, but I'm still concerned that maybe Bitcoin is just leading and telling us what might be around the corner for the S&P 500 if the Fed doesn't pivot to a less hawkish stance soon. In terms of economic data, real GDP is still positive, and the expectation for the Atlanta Fed real GDP is above 4%. Now, this isn't a perfect metric by any means, but it does greatly reduce the likelihood that we enter a recession in the short term. We finally got an update to the unemployment rate with the print coming in at 4.4%, and I will never be one of those people rooting for the unemployment rate to go up so the Fed can ease and for it to pump our bags. This is real people losing their jobs here, so hopefully the Fed pivots sometime soon and changes this trend before we see a spike like the one we saw in previous recessions. No major warning signs in initial jobless claims quite yet, so at least we're not seeing a big spike in layoffs. But if we take a look at continuing jobless claims and how it's slowly been rising, we can see that people that have lost their jobs are having trouble finding a new one. We are still waiting for an update to PCE and core PCE because inflation data is the main reason the Fed is still hawkish for this long. And that brings us to Ethereum, a very aggressive sell-off over the past few weeks alongside Bitcoin, but it's coming into a major support area where we had quite a bit of consolidation as well as the 200-week moving average. If you feel bad about how your Ethereum holdings are doing, just imagine being Bitmine and sitting on $3.7 billion in losses with an average price per Ethereum of 3,900. And they're probably in the best position because they're the largest and the best known brand, but all these other Ethereum treasuries are deeply in the red. ETF outflows remain red alongside Bitcoin, which isn't that surprising. But we did get interesting news that BlackRock is launching a staking ETF for Ethereum, which is good for Ethereum's long-term prospects. And I continue to be impressed by how well Ethereum is holding up against Bitcoin. It is still way above where it bottomed in April of 2025 against Bitcoin. And this is something we've seen across altcoins. Even with Bitcoin having one of its biggest capitulation events ever, the altcoin season index is sitting at 41, and the past 3 capitulations had us in Bitcoin season with an altcoin season index reading under 25. So there is some interesting strength in altcoins here relative to Bitcoin. But as always, I'm not going to get too optimistic until we see some investor risk appetite in the Russell 2000. That's usually the great sign for what's to come for altcoins. And as of right now, the Russell 2000 is still chopping around its previous all-time high. And it seems like this market is finally healing with the meme coin market sinking to a 2025 low. And for the endless people that say we never had euphoria this cycle, maybe we didn't have usual alt season and euphoria, but we definitely had euphoria when Bitcoin broke 100K for the first time and we were all euphoric, and the crazy meme coin madness we saw that culminated in the US president launching a meme coin. As for Solana, also has a very aggressive sell-off alongside Bitcoin and Ethereum, but coming into major support here, previous consolidation low and its 200-week moving average. So with it having that confluence there alongside a Bitcoin bounce, I do think Solana could see a strong bounce here. Solana continues to receive ETF inflows even with all the madness happening in this market right now. And interestingly enough, Solana Bitcoin is about to close this week green, which is very impressive given the crazy sell-off we've seen from Bitcoin this week. But if we take a look at the performance over the past year, we could argue Bitcoin, Ethereum, and Solana have been in a bear market for a while now, with Solana down 50%, Ethereum down 17%, and Bitcoin down 14% over the past 12 months, which is unheard of for a post-halving year. But as we look forward, the federal government is still running huge deficits. That trend continues to worsen year after year. Exponential debt growth results in exponential money supply growth as that debt has to get monetized and the fiat currency gets debased, which is a bullish tailwind on risk assets like the S&P 500 and fixed supply risk assets like Bitcoin, but there will be corrections and bear markets along the way, and we have to prepare accordingly. But as always, let me know what you expect. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.